Hey traders, it's Steve West. Just thought I'd do a bigger video to go over and recap sort of what I did today and a couple of things because it probably was a little complicated for some people who don't trade options that frequently. So I'm trying to explain to them what I did. Uh, you may wonder why I got involved in Google at the end of or the start of today, and it was really more for an intraday scalp based on trying to buy the first pullback on Google for at least a retest of the opening high, um, opening first push on Google, and I was looking for $3 to $5 on a trade. But as it turned out, the stock did not rebound like I thought it would or hoped it would. And if you go and look at the bigger time frame charts, which I do all the time, but I want to just point this out that here's a 60-minute chart, and we actually had dark blue candles. We had above 100 on my trend strength indicator, and we started printing dark blue candles yesterday. Last candle of the day actually had a divergence dot on it, so we had a slight decline in strength of trend. The market opened up the first 60 minutes today, so we actually took out that pink divergence dot, but then we printed it subsequently after that. So you could say that um, the dark blue candles warn you of a counter trend um, move in the stock, whether that be down in price or sideways in price, and we just correct more in time before we continue forward. Because I think that if you look at the daily chart, you can see that I think we made like a 3-year high or 4-year high the last yesterday and today in Google, and the trend strength is not showing negative divergence. We're not over the 100 mark in trend strength. So I think there's still room for Google to go higher. And nothing really happened today to make me to think that that's not going to happen over the next week or so. And so what happened today was I really did not want to get shaken out of this trade, even though I was just in it for a scalp trade. I had a, a good feeling for the stock that it will go higher in the next several days, and so I did a couple things. So let's go to the 3-minute chart and it can show you what actually happened today. Um, Actually, before that, let me just point one thing out. Let's go. All right. So here, I want to show you why sometimes when the bigger time frame charts are controlling price, you can go right through these overbought situations on smaller time frame charts, and that is the same for if you're trying to trade a 5-minute chart and the 60-minute chart is taking control. Like let's go for the best example I can find is Apple. If you go to the Apple daily chart, and in the early spring of this year, price just skyrocketed, right? And it had an extremely strong trend strength, and it was showing divergence in spots on the daily chart, and so that was a major flag for traders. But the reality was that the weekly chart was in charge of price, and the weekly chart wasn't overbought. So this whole period right here, you were getting warnings that the daily chart was overbought, but it was the weekly chart that was in charge of price. And let's get this a little bigger here. And and the trend strength for the weekly chart did not peak until the very top price of this move. So that's really when you can see what chart's in charge of price when it does a move like that. So it's the same thing when you're looking at a 5-minute chart intraday and you're going, okay, why aren't the targets being respected? Well, it's not the 5-minute chart that's in charge. It's probably the 60-minute or the 15-minute chart that's in charge. And so you have to sort of step back and go to your bigger chart and look at the targets based on those patterns and play it that way. So anyways, that's a long way of telling you that, telling what happened today. So anyways, so even though I knew that we were in um, an overbought situation on the 60-minute chart for Google, I was expecting that at least the for the day, I would get a rebound because of the strength of the daily chart. So I guess that's really what I'm trying to say. So, all right. So what happened today? So, price gapped open, even though the market was down a little bit at the start. And or was it up a little bit at the start? I think it was up a little bit at the start. But anyways, the retail schmoes got filled by the market maker, and then price corrected. It took out the low of the day and made a new low. So then when that happens, I look for a two-legged move. That the first bounce higher will most likely fail. It doesn't have to, but it most likely fail, and I'll look for a target based on projecting forward the first wave. So I did that. I had the grid drawn up in my videos. Go to the shorter videos I posted today. I had this grid drawn up for where I thought price would bounce to, and then I had this target range for the second wave lower. And I suggested in the videos that price would probably find support right at the 1272, which was right around the bottom of the last sort of low pivots from the afternoon's trading from yesterday. So that's more or less what happened. So it's price bounced, and so the aggressive accounts can sort of jump on that and play for a move, because you don't know if the move is going to go to a new high or what have you that day. But um, I like to see a move higher, take out the prior swing high, the minor swing high, which was there. So we did that. We took out the minor swing high. So then I look for support on the pullback, and that's what happened. So I bought sort of 2.5 pieces of Google today. I bought some here when it looked like it was breaking out, and then I bought the last 100 shares of it here. And I actually put up a contraction pattern grid, and those were my targets for the trade. There's 672, 674. Those were my targets for this, just for the scalp. We was going to train the scalp, and when we failed to get above the 38.2, and we're putting in these yellow contraction candles, I really had a bad feeling about the trade, but yet I had a better feeling about the potential for the trade over the next week. So I didn't want to get stopped, and I probably should have flipped and sold it and shorted it, and because it was telling me here, look at the bearishness of the position of the moving averages, and they're actually fanning wider. So that tells you that things are going lower, and we're having a hard time getting above the 38.2% level, and that's another bear sign. And it's just it had telltales all over this, and I'm not sure whether I stuck with this trade because I was trying to show an example of an intraday trade setup, and I was sort of locked into what I was trying to show people instead of saying, okay, what is price telling me? And I can't tell you whether I would have or wouldn't have flipped over and gotten short and what have you. But the flip side of what I was willing to do was to do some option sort of writing to get insurance for a stock going lower. I think my original stop was 667.75, I think it was, or 50. I forget now what it was. But that was my stop. And then when I was sitting here going, oh my God, this does not look like it wants to cooperate right now. And do I want to get stopped out, or do I stop right now and flip short? And actually, I didn't even think about flipping short. I don't think. I'm trying to remember. But I thought my first thought was, well, I should just go ahead and write some calls or what have you, or call spreads, and at least take a bit of money in case it does want to go lower, and it will sort of cushion my blow, and then reassess at the end of the day, and if it was in the tank, then probably get rid of the whole schmeal and lick my wounds. So anyways, I did a couple things. So I had 500 shares, so I sold covered calls for the whole 500 shares, the 675 calls, which expire on Friday, and I got 220 for that, and I think they're at, let me see what they're at. Last time I looked, they're at about were they $1.45 or something like that? Let me just check. 675 calls last trade, $1.60. $1.60. Okay, so I sold them at 220. They're at $1.60. So I'm in the money a bit there. And then, as price did move down lower, I decided to try and get even more insurance, or pay at least for part of my losses if I was going to ditch the whole thing, and the price is going to go through what I would be reasonably willing to hold it through. And so I sold another call spread, a 680, 685 call spread on for that would expire again on Friday. So if price were going to there's two things there. If price were to rebound from the levels here, um, I would the maximum upside I could have on that Google Common that I was owning was 675 plus the 220 that I made. So I'd make 677.20, and I'd be quite happy because my cost was 669ish. I think it was just over 669. So I'd be more than happy to take $8 out of the trade, and I was looking for like $5. So there you go. So if that was to happen on the Common, that would be great. And then as long as stock didn't go any higher than 680 by the end of Friday, I would just clip that thing. And I actually did another thing on that trade. Even though I was holding 500 shares and I was already hedged, I guess, from that perspective, I sold actually 1,000 of that call spread to try and. So I sold I think it for 48 cents. So I made equivalent of 96 cents a share I was holding to if stock was going to crater and those were going to expire worse, I was going to in essence add almost another dollar, take another dollar off my cost base for the stock I was long. So if I get stopped out of the whole thing because price goes in the tank, my cost was 669 roughly, less the 220, less the roughly a dollar for the call spread that I wrote. So in essence, I lowered my whole cost by about $3 and change to about 666. So originally my stop was 667.50, and now I've lowered my cost to 666. So I was able to think that what, I can handle price going down to I didn't really focus on that number because I didn't want to get whipsawed and sell at the low that I was going to let. I said to myself, unless the hell it goes to unless the world goes to hell in a handbasket, I was just going to let the trade at least get through today and then make sure that everything still looks fine. And to me, everything still is fine. So I think at worst, well, at worst, what I hope is at worst is that stock sort of just mucks around here and does that sort of 60-minute grind sideways in this kind of range that we've had today, and I'll get out, maybe making a little bit of money because of the options I've written, or at worst, around break even. So we'll see. Again, I'm roughly 666 is my cost. We're just under 666. So that's the Google trade. So you can see that we did get the 3 minutes extreme trend strength warning on the down, the push lower, basically right at that 1.618 target for that wave. And we had divergence dots, so then we got our counter trend bounce. So nothing is proven here yet. We could gap open lower more, and then I'll have to figure out what I'm going to do with that trade. So um, I could buy puts. I don't know what I'll do. We'll figure it out tomorrow. If it gaps lower, maybe I'll no. I guess I'll discuss that tomorrow. There's no use sort of prophesizing what may happen there. The other one that I did get involved with is Apple. Apple's the same sort of thing, right? If we go to the bigger chart, all right. So so again, the 60-minute chart, we're in an uptrend. Moving averages in bullish shape, and let's go to a 15-minute chart. This is probably a 15-minute chart data on it. Yeah. So my idea on Apple, and I posted a couple charts. Really, what I did originally was I said that I was hoping that this was sort of a B, C down to A, and then this was the B wave, and then this was the C wave. And so I had this target up here. And when it got down to here, I did two purchases. I didn't purchase. I did two put spread shorts. So I shorted puts, basically, which is a bullish play. I shorted puts. The strikes were 625 that I shorted, and I covered them in part with 620 purchase. So it was a spread there. First purchase or first sale of that, I think I got 87 cents or 88 cents. and then I did it again almost right near the bottom, and I got a buck two on that. So I think I averaged like 94, 95 cents on the two, and those are at I think they're around 67 cents now. So I'm 25 cents to the good on those, and I got 1,000 of those. I did 500 and 500 shares, so 10 contracts. Anyways, so again, my thought is that we are just making a corrective move lower here, and that we're going to bounce back at least to try and push to a new high. So that's what I want to see happen. And I don't. I want to see more strength before I get long in the common, and so I'm quite happy to go. Like if the price again chops around here, as long as it stays above 625, I'm going to make basically $1,000 in this trade by the expiry on Friday. And if it shows me more strength and wants to go, then I can get involved in the common. And this is just kind of like cherry on a cake, or the icing on the cake. Um, so that's the idea behind that. So it's kind of instead of trying to pick a bottom on Apple, and then getting stopped out or what have you, by doing these spreads, you can. I picked 625, which was probably like $4 below where the stock was trading at before I feel any pain. So that's kind of why I don't mind. It's like when I was talking about the CRM long several days ago, and I sort of said that we were at support, and the best way to start a position, I think, in some respects, is through options, whether it be a spread or whether it be just a outright purchase of maybe out of the money calls that are inexpensive, and if the trade doesn't work out, you let them expire worthless, and it's no big deal because the cost of the option is less than any normal stop you would have on the stock. So that's kind of where we are on that. And what else did I do today? I did some stuff in CRM, and let's take a look at that. CRM. I did a couple of things. One is I shorted against this 15-minute ATR first thing this morning because I thought that we would get. My thought was that we were doing this. We're doing A, B, C. So my target was kind of down here, and I like a lot of times shorting against these ATRs. So the ATR was at 143.83, and I think I shorted it actually at 143.81. That's the price I got, and then I actually covered at 143 for a third. So I made about 80 cents on that. So it gave me about a 40-cent cushion on 40-cent cushion on the rest of my holdings, right? So I thought, well, gee, I'm smart. I had 400 shares left. I'll just lower my stop to the adjusted cost base now, so I could take it 40 cents above that. So I was at 144.20, right? And then when the stock moved up there and then looked like it was rolling over again, I said, you know what, I'm gonna not double down on my bet here, but I did I shorted some covered call options. What were the strikes? Can't remember even the strikes on this. The strikes were, oh yeah, 145, 150s, and I did it at I think 80 cents. Yeah, at 80 cents, and I think those are at, I don't know, they're over $1 now, so I'm losing on those. And actually, I got stopped on my common, so all I have left on this trade. So it did bounce here. So we're still in resistance on this bounce. So I don't like the fact that it took out this 15-minute ATR. So I'm gonna look at how it trades tomorrow, and if it doesn't show any real weakness, I'm gonna get out of this position, take my loss. So I got stopped basically for basically flat on the common right near the end of the day, and I'm debating what I'm going to do tomorrow, depending how the market opens. Like if the market's strong and wants to go higher, this will probably want to go higher as well. But my first spot, my break-even point's at 145. Well, 145, 80, I guess, is really where my where my break-even point is right there. But if it opens up to more $1.50, those options will be worth more than that, and so because they'll have a bit of time premium in them as well. So we'll have to assess what's going on. So ideally, it stays below. If it stays below a buck 144.50, I'm very happy. If it gets above that, I start to say, what do I want to do? So we'll handle that tomorrow. So that's really the synopsis of what I did today, and hope that helps you understand some of the tweets I was making today and what I was trying to do. Okay, guys, take care.